Resolving the retrospective GST levy, founder and CEO Harsh Jain tells CNBC-TV18 at the Mumbai Tech Week, adds that the company is legally fighting the 28% GST on online gaming, expects resolution to provide headroom for growth.
RBI tightens the news around peer-to-peer lending, increases scrutiny after P2P players are said to have breached KYC norms and flouted guidelines with the promise of high or assured returns, according to reports.
Freshworks board cancelled CEO Girish Mathrubootham's performance award of 6 million stock units, citing changes in performance targets due to tough macroeconomic conditions.
The royal family of Abu Dhabi makes a strategic investment in Udaipur-based D2C fashion startup Be Young, which plans on using the fresh funds to expand domestic and global presence.
Early-stage VC firm Suvan Ventures makes its maiden investment, backs AI-driven sales execution platform Canlet, which helps B2B sales teams increase qualified leads and generate more revenue.
Consumer houseware startup Basil raises 3.6 crores in a seed funding round from IMA Ventures, and Appreciate Capital launches its range of bento boxes and bottles targeting urban parents.
The European Commission has opened formal proceedings against ByteDance's TikTok under the Digital Services Act to investigate whether the social media platform is doing enough to protect children, as per a Reuters report.
The European Union is set to fine Apple to the tune of 500 million euros over alleged breaches of EU competition law, as per a Financial Times report. The fine is expected to be announced early next month. Headlines that we're tracking for you from the startup space today. Now, shares of PB Fintech jumped in trade after the insurance regulator granted the company an in-principle approval for a composite license. Policy Bazaar will now be able to sell reinsurance products along with life and general insurance. However, a final approval from the IRDAI is still awaited. Yash Jain has the details and joins in now. Yash.
Well, the street was evidently excited on PB Fintech, the stock gaining as much as 8% in today's trading session, and that was largely because of the communication which came from the company over the weekend. PB Fintech informed the exchanges that they've received the insurance regulator IRDAI's in-principle approval to sort of upgrade their broking license to a composite insurance license from a direct license. Now, as far as the definition of direct license and composite insurance license is concerned, if you have a direct license, insurance broking license, then you can only operate in life insurance or general insurance broking business. But with a composite insurance broking license, you can also add reinsurance broking business to your portfolio, and reinsurance broking business is a large business opportunity for PB Fintech, which got the street excited today. Apart from of course, the size of opportunity, it was also the excitement around the company being able to add a new vertical of business which will evolve and grow and sort of give its results to the company in the next 1 to 2 years. As far as the size of reinsurance broking business is concerned, in FY23, the Indian reinsurance market collected premiums of nearly 54,000 crore rupees, out of which GIC-RE's share was about 36,592 crore rupees. Foreign reinsurance branches having about 18,000 crore rupees as far as that entire pie is concerned. Large part of business as far as reinsurance broking business is concerned comes from property business, liability business and life insurance business. Property contributing about 13 to 14% of the total reinsurance business. Also liability insurance contributing about 2 to 3% of the general insurance industry business in FY23.
Thank you, Yash, for those details. Appreciate you joining us. Moving on. Hope the retrospective GST issue will be resolved in court soon. That's the word coming in from Harsh Jain, CEO and co-founder of Dream Sports. He added that it is painful for them to shift from being unregulated to regulated, but also said that the government will get nearly $1.5 billion in GST from the gaming sector, which is a positive. Speaking to Shireen Bhan at the Mumbai Tech Week, he said that there will be a lot of headroom for growth for the gaming industry once the retrospective GST issue is resolved.
You know, obviously as an unregulated disruptor, you can grow much faster. But I think it's great that the government is stepping in, because there comes a time where too many people start doing too many crazy things in the name of disruption.
Yeah.
And I think the gaming industry went from like 10 gaming companies to 500 gaming companies in a few years. And so I think it's great that a regulator is coming. Yes, of course, there's a lot of pain for us as we go from an unregulated to a regulated environment. But I've come out publicly to say that the government has increased GST by triple prospectively as of October 1st for us. And now the government has come out publicly as well stating that they're going to get almost $1.5 billion of GST a year from gaming.
Yeah.
I think that's great. I think that as long as the larger gaming companies are not dying, we're now moving to a regulated entity, black and white, approved by the government. And I hope that's great for the sector. Retrospective GST, we're fighting in court. And I hope that that gets resolved. But once that does, amicably, in some way,
In some way.
in some way, shape, form, then, I think there's a lot of headroom for growth for the industry.
Okay, in what's brewing today, student accommodation platform Amber has announced a $21 million funding round in fresh equity and venture debt led by Gaja Capital, Lighthouse Canton and Stride. The funding will help the company expand its offerings globally. Now, founded in 2017, Amber has more than 1 million beds listed on its platform and is present across 7 countries. Joining me now to discuss these updates are Saurabh Goel, the CEO of Amber, and Gopal Jain, Managing Partner at Gaja Capital. Gentlemen, thanks very much for your time here on CNBC TV18. And Saurabh, I'll start with you. If you could briefly give us the details of this $21 million funding round. There's both equity and debt. How much is each and at what valuation have you raised this equity?
Thanks a lot, Ritu, for having me on the show. This round is, obviously our first institutional raise, and, we are supremely excited to partner with the, Gopal and Gaja Capital, for the same. The large part of this transaction, roughly 18.5 is towards the equity raise, and the other is venture debt, from the partners that you just mentioned. Again, cannot comment on the valuation as of now, but it's pretty standard, that we see nowadays.
Okay, Gopal, let me bring you in then. Where does Amber fit into Gaja Capital's investment strategy, and what really got you to sign the check for them?
Thank you, Prithu. As you know, for the longest time, for nearly 20 years, we've been investing in education, employment, and employability. We see these three as joined at the hip, and we've been long-term investors, proponents of the education sector, which is now also referred to by many as the EdTech sector. And if you look at the global education industry, one of the biggest trends in global education is international student mobility. In India, that's referred to as to study abroad. As you're aware, India is one of the largest exporter of students, and in some ways, the largest importer of higher education. So we see this as a growing trend globally. This could double over the next few years. It could grow to as much as 8 million students. And if you look at the markets, the 4 big markets, what I call the big 4, are UK, US, Australia, and Canada. And what attracted us to Amber is, first of all, its leadership position in the UK market and its ambition to grow into a leader in the other 3 big markets. What also attracted us to Amber, because this has been the Gaja style of investing, which is not just growth, not just scale, not just leadership, but also capital efficiency and strong unit economics. So Amber is a real example of a business which has been literally, bootstrapped over the years, unlike, many other businesses today, may I say that.
Saurabh, Gopal has given us a sense of how large the market could be and where the demand really is. But how are you going to deploy these funds to expand? You're currently already in 7 countries. Where else are you looking?
Right, Ritu. So it's been a couple of years, of us being in existence, and as Gopal pointed out that capital efficiency has been in our DNA. So already we have scaled to a couple of different countries, UK, Australia, and Ireland being our sort of core markets as of now. So the major part of the capital allocation will go into getting deeper and increasing our market share in markets like UK and Australia, where we are already present. But at the same time, we are looking to expand aggressively in new markets like US, Canada, even pockets in Europe like Germany and Spain, which we see as huge growth opportunities in the future. So we'll be allocating capital in terms of building supply, onboarding a lot of supply in these new markets, but also having a lot of demand partnerships with let's say study abroad players and let's say other companies in the education space, but also universities as well. So all in all, I mean it will be expanding, consolidating in the already existing markets, but also expanding into new markets. So that is one thing. The other aspect would be deploying capital in terms of building more robust product and technology. We believe that house hunting itself is a very complex, has a very complex customer side journey, and it requires a deep sort of product and technology lens to solve it. So that's what we've been working on in the last couple of months, and the idea would be to double down and really build out even better products to help solve the house hunting pain point for the customer.
Gopal, we just have very few seconds left. You told us about the potential of the company and the market. What are your expectations as far as return for yourself is concerned?
Well, I think more than it's not just returns, it's about impact. And I think you have this new generation of Indian businesses that are aspiring to create large businesses, but also global leaders from India. I think Amber has that ambition. As I said, it's already a leadership business in certain segments. So my expectation from them is to make a meaningful difference to the quality of student journeys, and to create another leadership business for India from India, a global leader.
All right. Okay, Gopal and Saurabh, we're unfortunately out of time. We'd love to keep talking, but thank you very much for your time here on CNBC TV18.
Thanks a lot.
Thank you so much.
Also on What's Brewing, fitness and wellness platform Fitpass has joined forces with Wexer, a global digital content provider. Now, this strategic partnership marks Wexer's foray in the Indian market and aims to revolutionize both the Indian and global fitness technology sectors, leveraging Fitpass's network and Wexer's expertise in digital solutions. To tell us more, joining me now is Akshay Verma, the co-founder of Fitpass. Akshay, welcome to Startup Street. And first, tell us how this partnership helps Fitpass expand its global influence. What made you join forces with Wexer, and what is the kind of impact you hope to make with this collaboration?
Thank you very much for having me here. So Fitpass is already India's largest fitness and wellness platform. We command a 52% market share in the country. Bringing somebody like Wexer and the digital solution and the global content that they bring, we have now access to content from 3,200 global studios, which means now people in India can work out with the best of the best. So you can do MMA with British athletes, kickboxing with Australian athletes, do the same cycling classes that the Hollywood A-listers do. And all of that is going to be possible exclusively through the Fitpass app. The primary reason to do this was because fitness aspiration is something that resides everywhere across the country and beyond tier 1, tier 2 cities where most of the gym network lies. And that aspiration, the only way to reach everybody was through content.
Yeah.
And global content was something it took us 2 years to negotiate, to get all the royalty rights, etc. So it's a big win for us and for the Indian consumers, I believe.
All right. Take us through Fitpass's current reach and business growth numbers. And with this collaboration, what are the offerings in the pipeline? What changes?
Okay. So today, Fitpass, the primary product is a universal membership to everything you need to get fit and be fit, which means you can work out at any of our 7,500 fitness centers, which give you gym, yoga, Pilates, Zumba, Krav Maga, CrossFit, mixed martial arts, rock climbing, swimming, no matter how you want to stay active. We're the world's largest platform for AI fitness coaching through FitCoach. Then we have nutritionist services, doctor consults, everything. Now, by bringing this content, what we're trying to do is layer on to our existing digital offerings, which was the AI coach, the nutrition.
Sure.
The AI coach for us was largely designed for the Indian body type. But obviously, there are lots of forms of exercise and workouts that are globally gaining ground. and are very impactful for the younger population in this
Okay.
country. Our country is 50% between the age group of 18 to 35. We're the world's youngest workforce. And these are people who are mobile, who are moving cities, who live in cities
Yes.
that are not their own. So their pursuit of wellness requires a lot of flexibility. And
Okay.
that is what we hope to bring with all of this
All right.
content.
Akshay, you mentioned earlier that you now want to focus on enhancing the accessibility and affordability of fitness solutions in India's Tier 3 and Tier 4 cities. If you could elaborate on these plans and how many cities are you looking at and by when?
So when we say how many cities we're looking at, we largely talk about our network expansion, which is our network of fitness centers and gyms. So we're looking at being in 100 cities by 2025. We're currently in 45 cities, and we will launch 15 more in this very year, which will bring us to about 60 and then 40 in 2025. So we should be at 100 by the end. Currently, we're already servicing about 13,000 PIN codes through our digital reach also, which means that it is beyond 100 cities already. Which is because of our digital solutions that we're able to access all of them. And why I keep saying Tier 3, Tier 4, because Tier 1 city is only 100 million population out of 1.4 billion. Right? So the real opportunity is actually outside Tier 1. And if I really have to pinpoint, you know how many people appear for exams like the NDA or the Indo-Tibetan Border Police Force or Home Guard, everywhere where you need a physical assessment. All of those are people who really need training, and that there lies a big untapped opportunity.
All right. Speaking of digital solutions, let's now also talk about Fitpass TV. How do you strengthen this offering with this collaboration with Wexer's expertise in fitness technology? How do you now aim to redefine premium fitness content and make it accessible again to existing and new users?
I think that is the vision now, that to make it so accessible that nobody ever says that because they don't have access to good trainers or they did not live in the right city or it was so expensive that they could not get fit in their own way. And it is our tribe of fitsters, people who get fit on their own terms, who wanted the best of the best in the world. So it is them who, our customers who forced us to think globally. And now we have all of this content, which is serving an age group of 16 to 82 and even serves toddlers and teenagers. So the content caters to anybody and everybody, postpartum mothers, prenatal mothers to be. So yeah, we're very excited about all that it serves. And it also serves the employees of India Inc., who are always on the move and who are used to an international flavor.
Sure, you spoke about your tailored wellness experiences using AI, but you know, if you could also talk to us about your revenue targets before we let you go very quickly.
Okay. So we are a private company. We will tell you one thing. We were built the right way. So we turned profitable last year. We continue to be profitable at scale. And like I said, we command 52% of India's market share.
Okay.
So we currently, we've already doubled our revenue from last year. You also have to understand that we have just come out of 21 months of lockdown.
Absolutely. Yeah.
And now we've been operational for 21 months. But in these 21 months, we're profitable. We're growing at more than 200%.
All right.
And yeah, the revenue numbers you will soon hear when we have some big announcements coming your way.
Well, Akshay, those are some really good numbers. Unfortunately, we're out of time. Many thanks for joining us on Startup Street today.
Thank you very much for having me.
With that, it's time for us to head into a short break. But coming up, have you ever tried millet chikkis? Hyderabad startup Troo Good is revolutionizing the low-end snack market with its affordable offerings. We tell you more about the company on the other side. Stay tuned.
Welcome back. You're watching Startup Street. Now, seeing a good demand for Nutri cereals, a Hyderabad-based startup, Troo Good, is trading the mass market route by selling millet chickpeas priced between 5 and 10 rupees, along with millet-based protein bars and Nutri bars. My colleague Aishwarya Anand visited the startup's production facility in Hyderabad to find out how it is disrupting the low-end snack market.
From Bada Anaj to Shri Anna, millets in India have come a long way. A 38% increase in exports to $57 million in last 5 years, with jowar, bajra and ragi gaining flavors across the globe. Seeing this demand of millet products, several startups have now hit the urban retail markets with ready-to-cook and ready-to-eat products. And one such startup is Troo Good. I'm here in Hyderabad at one of its facilities to understand how this startup is aiming to become the Cadbury of the millet industry. Raju, we're here at one of your factories where you're making millet crispies. What are those? What goes behind making it? Could you just explain that to us?
So what actually goes behind making millet chickpeas is a quite intricate process. So we initially started with gun popping the millets. So then we were thinking of how to scale.
Correct.
When we found dehusking the millets and then making them process and then put them into these furnaces and making them extremely unique, the sort of a crispy balls.
So how do you procure your millets? I understand that you're working on a farm to fork model. Could you explain to us how it works and what does your farmers ecosystem look like?
So we are looking at around 15,000 farmers directly and indirectly, and procuring nearly about 500 to 600 tons per month.
Now that we are done with understanding how you're making millet crispies, take us through your lab and explain to us how are you bringing the balance between, taste and when it comes to nutrition.
Generally, millets are very, very known, not tasty grains, like your wheat and others. So we had to do a lot of techniques to, make the millets, tastier. For example, using a little bit of rock salt, plus, soaking them in the water overnight, plus, adding a little bit of coconut milk. And then the nutrition. The nutrition is a key aspect. Take a millet chickpea with your regular peanut chickpea. There's a 50% higher nutrition. So therefore, combining the taste and the nutrition happened through inducing the millets into the regular raw material.
One of the key challenges is the shelf life of processed millets, which is usually between 3 to 4 days or 4 to 5 days. So I want to understand from you that how are you tackling this and what is the shelf life of Troo Good's products?
So Troo Good offers a minimum of 4 months shelf life for all the products. We don't offer astronomically bigger numbers in terms of like a 1 year, 9 month shelf life. We also have the chambers here, shelf life chambers. We continue to test these products, by keeping them in the ambient temperature. So we don't use any of these non-organic or any of the synthetics or, the preservatives, to increase the shelf life.
You have 6 production facilities in total. So how many products are you producing on a daily basis?
Each unit we're looking at doing a production at least about 5 tons per day. From 6 factories together, we're producing 30 tons. So which is close to about 2.2 crore on average chickpeas per month.
And what does your SKU look like?
So we have about 22 SKUs. Chickpeas and bars is one category. Then there is a dry fruit plus, and there is another variant which is noodles, which we started just now. Plus, we in fact have cookies and rusks as well.
One of the interesting facts about Troo Good is that your millet chickpeas are priced somewhere between ₹5 to ₹10. I want to understand was there a special thought that went behind making the your products more affordable?
When I started this business in 2018, the whole USP is that how do you provide the nutrition in affordable price points, which was never the case before, because most of the these 5 rupee, 10 rupee category, you see a lot of products, but most of them are snacks and oily snacks. When we combine the taste plus the nutrition with a great price point, is when there is no turning back.
What did your FY23 numbers look like, and what does FY24 look like for you?
So we started in 2018. Our first balance sheet was 14 lakhs. From the 14 lakh to 54 crore, which is 2023, you can imagine how we have grown. this year already we are at the run rate of 120 crores, annual run rate. And we are looking at closing around 200 crores next year in 2025.
While India is home to 1,000 millet-based startups, Troo Good says it has an edge, as it has been able to crack the affordability code, which nobody else has been able to do. Packing all the nutrients and taste in just the price range of 5 to 10 rupees, the firm says is no easy feat. The company is now planning to raise 200 crore rupees in Series B round by October end to build a mega production facility. With Gaurav Tyagi, this is Aishwarya Anand for CNBC-TV18.
Okay, on that note, it's a wrap on this edition of Startup Street. Thanks very much for watching, but stay with CNBC-TV18. More news and updates will continue on the other side.